As many of you know, we've been working on a book for the last 2 years. It is finally done. We hope you enjoy it. Go to www.uncommonwealth.com and click on resources. And underneath the resources tab, it'll be a book where you can buy your own. We hope you enjoy it and hope it helps you get down your uncommon path yourself. Thanks.
Everyone dreams about living an uncommon life, but how we define that dream is very different for each of us. And for most, it's a lifelong pursuit. Welcome to the Uncommon Life Project podcast. We're going to introduce you to people who are living that life or enjoying the journey to get there. We're going to also give you some tools, tricks, and tips for starting or accelerating your own efforts to live an uncommon life, a life worth celebrating and savoring. Please welcome your hosts, Brian Dewhurst and Philip Ramsey.
Welcome, everybody, to another episode of your favorite show, my favorite show, Brian's favorite show, the Uncommon Life Project.
Come on.
Well, I'm your host, Philip Ramsey.
And I am Brian Dewhurst.
Thanks for tuning in. All right, we got a guest. We got a bio. We're going to jump right into it. I'm excited. Let's go. Rick Cordaro. Who is he? Why is he here? And what's he going to teach us? All
right. Rick has a dedicated career to the IDI Market, which you will learn about what that means here very shortly, for close to 40 years. He's also kind of a mentor to Philip and works at Principal Financial Group here in Des Moines, Iowa. So welcome to the show, Rick Cordaro.
I'm very happy to be here. Thank you very much.
This is Rick's first podcast. Am I right, Rick?
Absolutely.
And he's got a nice microphone. He sounds amazing. He's ready to teach us. I'm just going to say the first thing first. Disability insurance is like what Rick is passionate about. And I'm going to throw a plug in. So I started at Principal Financial Group, lasted 3.5 months. But Rick sought me out early on. He was like, hey, Philip, you're going to make it in this industry. I would love to mentor you through this because it's just a tough industry. And he's like, I would love to be able to work through some of these things with you and help you kind of advance your career. And he's done that. He's always been there. And he's been a trusted friend and mentor in my life. And so thank you for believing in me, because there's not a lot of people that actually make it in this industry. So I was telling Brian the other day when we were going to have you on, it's fun to have you on and kind of edify. You saw something in me that I don't know if you saw in a lot of people. And so it's fun to be here 9 years later.
Well, actually, what you said, it was 3.5 months. They told me I'd get a bonus if I can keep you 3 months.
Yeah.
I said, shit, man, we got to keep this guy around.
Yeah. So he made that cutoff barely.
Yeah, really.
So let's talk about disability insurance and how you got to where you're at Principal. You can go back as far as you came out of your mother's womb, and whatever you want to start talking about, we want to hear it. We want to hear your story.
Well, I was actually, when I grew up in my family, you either wanted to be a priest, a teacher, one of those two things. Those were the two choices in our family. And I was the youngest of 6. And I said I wanted to be a salesperson. I wanted to be in sales. Why? Because everybody that I knew in sales, I grew up on the south side of Des Moines. They all had really nice Cadillacs, and they had their golf clubs in their trunk. And, which is, I'm thinking, these guys golf a lot. They're driving really nice cars. So I said, that's what I want to do. So I actually started selling when I was 19. And I was in the real estate business for almost 5 years. And for any of your people on the podcast, remember 1981, the interest rates were, 18%. Yeah, they're a little bit different. And so I couldn't sell a thing if I wanted to. And the funny thing was, I for whatever reason, I went out and was buying more life insurance. I mean, I don't know what that meant, but maybe I had plans. But and the guy who sold me the life insurance said, "Hey, you'd be really good at this business." So and 2 weeks later, I'm in the insurance business. Wow, and the funny thing is, I started selling. This is back when we had no computers. Everything was rate books, and you had to calculate the benefits and everything by hand. And I sold a lot of disability income insurance at the time. And a lot of people would say, hey, why are you doing that? And I said, because you're not. And, so I said, well, I'm going to do this. And so I became kind of that guy, that when anybody mentioned disability, they came to me and said, what's these people talking about? So I did that and I did rather well. And then eventually somebody talked me into going to management, which was the biggest mistake I ever made in my life. And so, after that, I left management, and then I started working in distribution on the other end of the disability market. And, as opposed to being an agent, being an individual who promoted product through the brokerage community. And my first brokerage job was with Paul Revere, a company out of Massachusetts, and terrific company. And then they got bought out by a company, Provident, and then I went on to the Guardian, a big company out of New York, and
right.
I worked 5 years for them, and then Principal had called me about 23 years ago. Larry Relitz first contacted me, and Brian Lauber, and they started telling me about this concept of doing more distribution with their product. They predominantly did most of their disability with their career distribution model, and it pretty much was proprietary. They said they really want to do a different job on this, and so I said, sure. I closed my eyes and said, why not? And so where we are today is I manage the distribution within 5 states for Principal, and got a great team that I work with. And not only am I passionate about it, I eat, sleep, and drink it every day. If you were to, my wife, she goes, she always tells me, I'm just going to talk about disability income with you instead of the kids, because you don't want to talk about anything else. And so I said, fine, that's good, but here I am. I've had a great career, and I truly love working with the Principal. They're really a forward-thinking company, and they have given me enough rope to hang myself a few times. But it's been a great relationship, and I've loved it. And I've along the way, I have acquired a lot of great friends, and that's the neat thing.
That's cool.
That's where I am
now,
today.
I want to just talk about it real quick. So, salesman,
Mm-hmm.
you're a good salesman if you say, "Hey, do you want to buy that house? Let's put it on a credit card."
Yeah, no kidding. That's right.
Holy cow. You found your niche.
Yeah.
Okay, so I want to take a quick step back. Tell us what disability insurance is. Some of our listeners may not even know what that is. So let's start there.
That's a good question. And why we call it disability income insurance, I'll never know why. Because it brings on a negative connotation, just like life insurance really is death insurance. I mean, you got to die to get it.
Right.
And but with disability income, we prefer to call it income replacement. And fundamentally what it says is if I can't work and I'm under the care of a doctor as a result of a sickness or injury, then I'm going to be, given money to provide for my family's well-being, whether it's and we don't care where they spend their money, but pay their house payment, car payment, their medical insurance premiums, continue to pay their kids' college education. I mean, whatever that money, that stream of income. Imagine tomorrow if I were to tell you, that, hey, hey, Brian, you're not going to work. You're not going to be able to go to work tomorrow. And on average, it's going to be probably 31 months. That's what an average duration of a claim would last. So are you prepared to take 31 months off without pay?
Right.
And, without a paycheck? I mean, this is paycheck protection. And when you think of the odds of this, a lot of people say, well, everybody buys life insurance. Obviously, we own homeowners insurance. We have car insurance, right? We have all these insurance products to transfer the risk of something happening to it. But when you look at the number, let's just think about the numbers. The likelihood of a person dying before they reach age 65 is 1 in 106, okay? And the likelihood of a home catching fire is 1 in 88. And then you have the likelihood of being involved in an auto accident is 1 in 70. But the likelihood of becoming sick or hurt prior to age 65 today for a working individual is 1 in 7.
Wow.
So when you think in terms of the odds, now I'm not making these up as most salesmen may think we do, but this is this is from the Society of Actuaries and the National Safety Council. These are pretty legit numbers.
Right.
And when you think of the risk that we face every day, everything we're going to have in the future, whether I want to own a business, whether I want to retire comfortably, whether I want to send my children to school, whether I want to save for a vacation, whatever I want to do in the future is dependent on my ability to get up every day and go to work. Okay. Right. Because everything I'm going to have in the future, is going to be dependent on my ability to earn a paycheck. And you take that out of the equation, then we got some problems.
I heard when I got into this business and I kind of came up in the Guardian before going independent, but it was, they had that conversation of like, you're more likely to have a health incident, if you rank the insurances in the order of like what the probability that something's going to happen, and taking kind of property and casualty out of it. But, health insurance is kind of the first, like something's going to happen to your health before now and 65. Right. And then second was disability. And then third was life insurance. And then I think fourth is long-term care or something like that. Right. So when you look at it that way, I think there's a lot of, impetus or importance put on the life insurance component, but it's actually statistically less likely than the disability event.
Well,
Can we talk about that, or do you want anything?
I want to say this because in our philosophy, our number one thing we like to tell people is that they are their best asset. Like no one's going to put more money in their pocket than themselves. Now, if you get sick or something's going on, like you're now inhibited. Like it's one of those things. Like if something were to happen to your cash flow, things like you were talking about, Rick, go away pretty quickly. And so disability, to ensure that, it's one of those things, once something happens, you want more of it.
Right.
And this is one of those things that can help you protect you, which is your best asset, right?
Well, true. And when you take a look at income, one of the problems I think advisors should, look at is taking future earnings and capitalizing it and creating and really calling it an asset, putting on their balance statement. When you compare assets, let's say you may have a car worth $36,000. You're going to insure that. You may have a home worth $300,000. You're going to insure that. But you have future earnings for let's take a 35-year-old who's making $75,000 a year. That's just under $5 million.
Millions. Yeah.
You know what I mean? So when you take a look at what do I really want to protect, that creates the car, the home, everything else like this, you would think income would be important. I do.
Right. When you see the different legislative things happening, not to get political, but the whole, let's raise the minimum wage to $15. And you're seeing a lot of these other things happen legislatively as it relates to employment. It's really forcing a lot of business owners to do contract work. And then when you look at the lifestyle of the younger generation, they want freedom. They want to work out of a RV, they want to travel. We kind of say the new employee benefit is time and flexibility. Mm-hmm. That puts, and you look at that generation is changing jobs quite a bit. It puts a lot of that pressure, on income and protecting that income back to the individual, where I think largely over the last 30 years, maybe the employers sheltered some of that risk, or made a group product available. Can you kind of talk about, just the landscape of the marketplace that you're seeing and how to insure that risk through your employer and then vice versa, ensuring that risk on your own?
Yeah.
Great question.
There's a number of ways to protect your income. And fundamentally in our marketplace, you have three different core areas that people, rely on. Number one, a lot of people have a lot of trust and faith in the Social Security, aspect of this. However, there's a problem with that. The fundamental problem with Social Security is that the vast majority of those claims initially will be denied. Okay. And I don't want to badmouth Social Security. It's a terrific vehicle and tool for people, in particular in the retirement arena. Mm-hmm. But the disability income, the fundamental problem with that is And they will tell you, you guys ever hear the story about, there's two fundamental problems with going to Disney World. Number one, it costs so much and it's so crowded. Okay. Well, that's an oxymoron. It doesn't cost too much because it's crowded. People are going. Okay. The same thing can be said for Social Security disability. People are becoming sick or hurt at a rapid pace. Okay. And a lot of people are filing for Social Security and they're being denied benefits in the most part. The fundamental problem is it's not that they're not becoming sick or hurt. It's not that they don't qualify for it. There's two problems. Number one, there's no money. Okay. And there's not enough people to manage the onslaught
Benefit.
of people becoming disabled. So what does that tell you? Then you can't really avoid it. But the problem is this is something you really don't want to rely on. There's really no guarantees with that. The other thing is if you're an employer or if you have a small employer group or if you work for an employer, many times that employer will offer you a benefit and it's called group long-term disability income. It's considered a wage agreement, a wage continuation agreement. Fundamentally, it says if you become sick or hurt, we're going to continue a portion of your income based on the terms and conditions of this policy that you can help, support your family. Now that is good. There's a good side and a bad side. Number one, you're going to get in, it's going to cover you, and you're going to get a benefit that may or may not cost you anything. Most generally doesn't. The bad side of it is that when you receive the money, it's going to be taxed as ordinary income. So many cases, these plans are designed with a 60% replacement. Now, I'm not a brain surgeon or rocket surgery. I don't do rocket surgery, but I will tell you this: you go from 100% of your income to 60% of your income, okay? And both of those being taxed, your net take-home pay is going to be significantly less than it was before. Then you add on to that, a lot of people don't understand the consequence of becoming sick or hurt with a group plan. Number one, you're going to get a level of income that's far less than what you had, but you also have to pay for your health insurance. You see in the state of Iowa, after a certain number of weeks, the employer is allowed to terminate their employment agreement, okay? Which means now there's two things that happen. Three things. Number one, I lost my income or it's been greatly reduced. My health insurance premium now for me and my family becomes my burden, okay? Right. And number three, my retirement plan, typically my 401k or any type of qualified plan, is frozen in time. Okay. So a lot of people don't understand the consequence. Now, the biggest thing in dealing with people who are business owners, maybe high income earners, because of the inherent caps on these benefits, where they limit the amount of benefit that you can get. And most generally, we see like a $6,000 monthly benefit. So you have an individual making, $20,000 a month. They're not getting 60% of their income back. They're getting 30% of their income covered, which a lot of times, I would say 90% of the times when I'm meeting through my brokers and they're visiting with their executives, they have no clue. Okay. Why? Because we all understand health insurance because that represents 90% of employee benefit cost. The other 5% is coming from the retirement plan. This is like you ever gone to McDonald's and they say, would you like fries with that order? Oh yeah, throw some disability in on that. You know what I mean? Right. So there, when you look at the time element involved and the consequences of it, they say, hey, we got a disability policy. Well, yeah, you do, but you don't. Okay. And this is really, people really need an advisor to help them do that. The importance of the advisor is paramount. Okay. Because it's people like you that really have people question this. What's going to happen? Let's find out today what would happen if you became sick or hurt. It's like a person says, well, I don't know how much life insurance I have. And I said, well, good. Here's the deal. We can find out one of two ways. We can look at it and see how much you have today, or we're just going to wait till you die and see how many people just curse your name. And just you find out who your friends are and who your friends are not. Okay. So now's the time to find out and do that analysis of what's going to happen if you became sick or hurt today. Okay.
What pitfalls do people, like we usually like to give people pearls or nuggets, whatever you want to go with, of they can look at their policy if they have one now, or even the benefit that their employer gives them. What are some pitfalls that you see in the industry that like people fall into? They either buy something that really isn't going to protect them. Talk about those things for our audience?
Well, the fundamentally, the biggest pitfall I see is you don't buy, an individual buys a product that is not appropriate to them and to their occupation and what they do. Okay. Now, if you could take the industry here, let me first of all say that the industry is alive and well. When I started in the business, there were over 400 companies manufacturing disability income products. Today, there's about 26. Okay. And of the 26 that are remaining, there's not a bad one in the house. Okay. I will say that much. We have an industry that is very unique in that we're very close knit. I know most of my competitors very well. I know one time I had a group of them over at my house, and my wife, by the way, is the best Italian cook in the world. You know, I'm full-blooded Italian, and she's full-blooded Italian, and I don't have to go far to get the best Italian food ever. Okay, so we had them over, and they're all sitting at our dinner table, and she's overhearing the conversation. And after they leave, she goes, you know, none of these are your brokers. What is the deal here? She goes, what was the deal? I said, well, yeah, they all compete with me. And she goes, well, why are we feeding them? You know what I mean? Did you want me to put arsenic in the food? I said, no, these are my friends. And, you know, actually we all have the same goal in mind as a, you know, to bring awareness to this industry and to the product and how important it is. But that being said, you know, when you look at the industry, there's two fundamental contracts or two approaches to income replacement. One is dealing with time and duty, and the other is dealing with income. Time and duty would be a product that is for a person who has a high degree of manual duties, laborer, you know, these type of individuals. The loss of earnings individuals are the individuals who typically are, you know, the CPAs, attorneys, surgeons, you know, the doctors, the physicians, right, that their incomes derive from their ability to get up every day and do something. Okay. As opposed to the time of duty, they're punching a time clock and it's based on time. Now, that being said, I instead of saying blue collar, white collar, I've come up with a phrase and I say, well, when does your customer take a shower? Okay. Do they take a shower before they go to work?
That's great.
Or when they get home from work? And that, once they answer that question, then I could say, you know, this product may be appropriate, this one more appropriate for them. Okay. But fundamentally, the products there's really not a lot of difference. What I think, though, the most important element of this purchase is going to be that advisor. Okay. And I always go back to the advisor. They are the ones that are most important in what they do. Okay. And Phil, you know this, I have not been my own advisor. I did not even sell myself my disability income policy. I did not sell myself life insurance. I learned early on that I'm going to be my worst customer. Okay. Well, I'm cheap, number one, and I just didn't want to. So what I did is I hired an advisor and said, listen, you keep all the commission, you do it, but do the right thing for me and my family. And if I become sick or hurt, I want you making that phone call to my wife and telling her everything's going to be okay. If I die, I want you calling her and telling her everything's going to be okay. And that's what that advisor is key in this whole equation. And so what you want to do is, find that advisor who is well-bred, has a good understanding of the product and the need of the customer.
That's good. It's good.
Let's talk about the duck. We all hear Aflac, the marketing. How does that fit into all this?
I love
the short-term disability.
I love the duck.
Let's talk about it.
If you were, if we were doing this at my office at home, I have a huge duck head sitting it behind me. And that duck, it's actually a cover for my golf clubs, but it's a big duck head, right? And it's the Aflac duck. And I will tell you this, I love the duck because because the duck has brought awareness. I mean, he's doing all the advertising, right, for people to become aware of income. Hey, something bad's going to happen if you become sick or hurt, right? But we don't compete with the duck.
Right, it's a different market.
We're not in that same space. They are a named peril type of cancer, heart disease, broken foot, broken leg, type of thing. You get a check. People go, well, should I buy Aflac? I said, well, if you get cancer, you want a bonus check? Well, sure, get a bonus check. You know what I mean? But I say, if you get cancer and you can't go to work, how about a paycheck? All right. And this is what we do. We cover that paycheck, that long-term paycheck.
Right.
And I love, like I say, the Aflac, I love it. And actually some of my better brokers are affiliated with Aflac. And like I said, if I were home, you would see this big duck sitting behind me. And
Well,
I'm a big fan of the duck. But,
I bring it
again,
up.
we're not talking about the same thing.
Right. Yeah. And that's what I wanted to kind of cover is it's a different coverage. And I think it is confusing for a lot of people. They're seeing these things marketed on TV.
Right.
I spent in my consulting days, I spent a lot of time at Geico Insurance. And so, the get-go brought a lot of awareness to property and casualty insurance.
Sure.
And kind of the same thing with the duck. But, I think people are looking for like, how do I fit all this together and actually still retain a portion of my paycheck? But when something goes wrong, that I have the proper coverages in place. And I kind of hear you saying that's, obviously our role as the advisor, but I think it's also the industry coming together to put products together that can fit and complement each other too.
Right. And a lot of things, when you took those incidental, they're not incidental, but I mean, these accidents and type of things, a lot of that can, to cover your deductible. That should be fundamental planning with an advisor, right? Mm-hmm. But there's one thing you can't really cover is that long-term income loss. With 20, right. It's estimated about 28% of the people who do become sick or hurt today it's going to be a career-ending disability. I mean, they'll never go back to work. That's a big number. Okay. Right. And so that's something that the duck is not going to be able to, there's no quack in that deal. They're not going to do it. I'm sorry.
Yeah.
So let's talk about owner occupation, like your own occupation. Why is that important? And talk through like the specifics with that.
Well, that's been a battle we've had for 40 years since I've been in the business. It's not really a battle, but it's something that's interesting, is that definition of disability. Okay. And you have three fundamental levels of definitions. And let's go to the lower one, which would be, hey, if you can't do your occupation, we're going to pay you a benefit, but after 2 years, it's going to go to an any occupation definition, meaning, if your doctor tells us you can do any occupation based on your education, training, and experience, you got two choices: either stop getting a benefit from us or go to work. So they're compelled to go back to work. Okay. The other one is what we call a modified own occupation definition. It says, hey, listen, we'll cover you in your occupation. And if your doctor tells us you cannot do that, we will go ahead and pay you the benefit for as long as you have the policy. However, if you choose to go back to work, then we're going to stop paying you. And it would be more of the customer's choice. Okay. The third says, hey, if I can't do my occupation, I want to be covered specifically in that occupation. And if I go into another occupation, regardless of what it may be, I want to be able to collect from both. Okay. So when you look at the numbers and you look at what's appropriate for the customer, a lot of people, let's take the best scenario. That would more or less apply to an individual who has a postgraduate degree, who has a highly specialized, maybe board certified surgeon, okay, or this type of thing where it's very, very defined. And when we talked about these individuals who go to work every day, and they're not getting paid by the hour, they're getting paid by what they do. These people code these functions, for insurance and what have you, with a certain code. And when you look at that code and that represents that particular function of their occupation represents 70% of their income, that would be that, whatever that occupation or duty would be an ideal situation to cover. But then you get people who are maybe an executive or a business owner, and they do everything. They do hiring, firing, bookkeeping, sales, inventory.
Taking out the trash.
That definition would never apply. I mean, for them. Let me go back to the first case scenario. Of those true own occupation definitions, less than 2% of those claims are ever paid based on that definition, because it's a very, very hard to do. Let me tell you, if I, and it was funny. I had a visit today with an individual who's an eye surgeon. Okay, this morning, and we had this conversation, And I said, well, listen, how quickly do you want to get out of the eye surgery business? And he goes, never. I mean, he goes, it took me 8 to 9 years to get here through my medical school, my residency and internship, along with a bill of, hundreds of thousands of dollars. Right. No, this is my lifestyle. This is where I want to be. And so I said, well, you'd pretty much do anything to be in that, even if you could only do 1 surgery a week as opposed to 10 that you do now. He goes, absolutely. And there you go. I mean, it would be very difficult for an individual who would knowingly get out of their profession. Okay. Because that 1 eye surgery, he could make more money there than he could do 40 hours of consultation. Okay. So, I mean, it's just all common sense. So, but it does happen. I'm not saying it doesn't, but it really depends on the individual, and they got to, is it appropriate? Does it make sense?
Yeah. Is there a 4th level? Like, when you hear these like celebrities, like I think David Beckham insured his right leg, when he's playing soccer and making $100 million, like, is that kind of the next level beyond disability when you get really specific?
Yeah, and that would be something that is covered by a company that is in the non-domestic market. The domestic market would be your Principals, the Mass Mutuals, the Standard, Guardian, these type of carriers that are domiciled in the U.S. Those type of risk are covered by a company called Lloyd's of London, and Lloyd's of London is a company that, they go back to the shipping days. Okay. They're very old. They've been around a lot. And they basically, it's kind of like it's like going to a betting house. Okay. Literally, where you have individuals who will be willing to put up money. Okay. Or take on a risk based on a certain, condition. It could be a professional athlete. It could be a singer. It could be, Liberace, covering his fingers. You know what I mean? And what they do is they just tally up, who wants to share the risk. And the term underwriter, you've heard that term before, right?
Right.
That term underwriter. Well, let me go back. The Lloyd's of London was called Lloyd's Coffee House in the early days, and that's where they got together, and they had all these individuals who had desks. And these desks would contain certain syndicates that would say, okay, I'll be a part of that risk. I'll take on a part of that risk. So if that ship goes down or that whatever, I'm willing to give X amount of dollars to cover that loss. And so they would write their name under the risk. They would sign their name under the risk, hence underwriter, the term underwriter. And so as Lloyd's of the Lloyd's Coffee House evolved, it became Lloyd's of London. And obviously it's a global company dealing with all kinds of peril. Okay. Wow. And they don't sell insurance. What they do is they sell, they basically sell risk. And within the United States, within the domestic market, they have what's called cover holders. Okay. And some of the most popular one that I work with is Peterson International, and they're out of California. And every state has to approve them being in the business. And Iowa, just probably 5 years ago, finally approved them to be in the state of Iowa as an excess carrier, meaning whatever the domestic market can't do, they can do above it. Okay. And so that's another level of protection. And really cool. What are their limits? Whatever you're willing to pay in premium. What I mean?
They're able to quantify it to take your money.
Yeah, exactly. They're just, there's not a risk they haven't seen that they couldn't charge enough for. And, they don't call it. They have a policy that looks like a life insurance policy, but they cannot call it a life insurance policy. And so what they call it is failure to live policy. So you failed to live, and so that's how they do it, and it's pretty cool. You know what I mean? But they're great, and these people are good friends of mine. I've come to know them over the years, and there's nothing they can say no to. Okay, whether it's a medical condition or whatever, there's always the right premium that somebody will pay to cover a risk.
Well, I want to pivot. Go ahead, Phil.
Yeah, no, go for it, man.
I want to pivot just a little bit because it's on that vein, though. I don't think a lot of people understand the insurance world. It's kind of like this behind the scenes, opaque, but it's one of, I think, the most important industries in our country, and has allowed us to have such economic expansion because we have had a robust insurance market to offset risk. And with that, though, each carrier is different, and they're looking for kind of that type of business or risks they're willing to underwrite and get comfortable with. Can you kind of talk about that within kind of the disability world? It sounds like it's a pretty tight-knit group, but there's carriers that are looking for, maybe the shower before you go to work, and then there's carriers that want to, insure the shower after you go to work.
Yeah.
Can you kind of share on that?
Oh, absolutely. A lot of times, if the carriers simply in the disability income product arena, there's not a lot of them, but if there are, they have a particular way that they manufacture their product to attract certain type of customers. Okay. And those type of things, they're either going to be in that blue collar market or the white collar, before or after shower. Fundamentally, though, what you find is it's interesting that it's not so much about the product. A lot of it's about the distribution. Okay. How do we distribute our product? Do we simply do it with our proprietary distribution? That would be like your Northwestern Mutual. Or do they offer it to anybody who wants to sell our product through various different channels? That could be through a brokerage general agencies. It could be through IMOs. It could be through wirehouses. It could be through a banking network. There's a lot of different ways. So that fundamentally is the most popular. Okay, there's very few companies that just keep it to themselves. I mean, there's a couple, but there's the rest of it. They spread it wide and clear. They broaden that net way out there. Okay.
Sure.
You really don't see, within the marketplace, most of the advisors that are doing this understand the market enough to know who to call on when they need a particular solution. Okay. Mm-hmm. Now it goes beyond that. I could speak to Principal. Principal is a company that for decades has been focused on that small to medium-sized business. Okay. So knowing that, we want to be able to manufacture solutions that are consistent with our message, okay? And our message has always been that small to medium-sized business and all the perils that small business owners face. So we not only have that individual disability, if you become disabled, we're going to cover your home paycheck. We have overhead expense policies. We have disability buyout policies. We have key person policies. We have loan protection policies. So if you have a long-term loan, we'll protect that. We have retirement products that if you can't work anymore and you lose your retirement plan, we'll help and fund the balance of that through the rest of your working years. And then we offer various different discounts and underwriting programs. In particular, ours are focused on that small to medium-sized business, up to 200, 300 employees. And so that's our focus, and that's where we're really good at. Okay. And so that's where our focus has been. But a lot of times it depends on, the company and how widespread they want to be. For Principal, we are the only company that does manufacture every product in the marketplace today, every solution. Where if you went to another company, you'd have to get a couple products from one company, then you have to go to another company to get another couple products. So we're fortunate to say that we see our customers as predominantly professionals and small business owners. So our product is catered toward that. Our underwriting is catered toward that, especially in today's world where you have a lot of, non-traditional employers, non-traditional people out there, the entrepreneurs that I think are very important. And we're seeing a lot more of those people. We've got products and we got services that are product appropriate for them, and we're able to underwrite them successfully.
Right.
So
yeah, it was interesting. We had a guy like that, say a little bit hybrid, entrepreneur and in a day job. And we did a call with you, and you did a great job just asking questions, understanding his, professional career, his income, so that the underwriting process would be accurate and tailored. And I really appreciated that because, there are so many different, people out there making money in different ways. And you really took the time to kind of make sure the fit was right up front. And then the cost expectations were aligned.
I come with the attitude, I'd rather irritate you now than later. You know what I mean? And I've always, it's the Columbo approach. I ask a lot of questions. And the reason I do that is because, when we put together a proposal or an illustration for an individual, we want to feel 99% sure that we can fulfill on that. Okay. Now there's situations that come up, oh, hey, I forgot about the open heart surgery I had last week or something like that, which we were going to like, what? But, but I mean, things like that. But the disability can be complicated. So my role is to make it really easy for an advisor to have that conversation with their customer.
Right. I mean, I think honestly, let's be honest, Rick Cordaro was probably the best thing that happened to me at Principal. But also disability, Principal does a great job in disability. And that's one thing that I would be confident, and we have in the past sold that to our clients, and we're really confident. That's why we wanted to have Rick on the show. I think kind of just wrapping up, where are you headed? How can we help you? How can our listeners hear more about you? Get in contact with you if you need to. Obviously, they can call us. We can call you.
I want that Italian dinner. Is what I
want the Italian dinner. And then I want to know, do you shower before or after work? Or
I shower all the time, man. I'm always in the shower.
It's just dirty.
You know what I mean? I tell you, I'm a blue collar guy in a white collar business. I love to get my hands dirty. I love to get out in the yard and tinker with things. Unfortunately, when I do tinker too much with things, it costs me way too much money. Because then I have to hire somebody who does that for a living. Right. And you know what I mean? But, where do we go from here? I think the important thing is to give you guys a call and have that conversation and just simply ask, hey, if I were not able to work tomorrow, because tomorrow is not guaranteed to anyone. Right. If I'm not able to work tomorrow, I need to know what it's going to look like going forward. Okay. Mm-hmm. And that's really the bottom line. And then we just work together and we say, okay, we'll piece all the parts together. We'll understand what the financial consequences are of you becoming sick or hurt. And then your customer makes a decision. Okay. Mm-hmm. And our job is to give them, facts that they can work with. I really want to know what's going to happen. And number two, I want some good solutions to it. Okay. And that's how it's really not hard. Okay. And but we need to do a really good, thorough job of understanding what all the options are.
Right. Awesome. Man, I mean, out of anybody in the world to make disability insurance awesome, Rick Cordaro, everyone.
And this is, isn't it crazy? Because nobody else wants to do this. And so, I learned long ago that you want to know something, you want to know it well, and then you want to know you know it, and then you just got to go out and find people who know that you know it, so you can tell them. Right. And that's been my deal for years. And as I get older, I kind of forget all that stuff I learned early on, which probably is a good thing. But but no, I got a few years left in me. My wife won't let me stay home.
Are the golf clubs in the trunk?
Yeah, you know what? I bought a new pull cart. Brand new. For here on forward, I'm going to start walking these courses.
Good for you.
I need my exercise. Yeah. So and it's got a room for beer, for everything, all the necessities of a golf, journey.
Sure. Too many people are on their carts, but they have a dusty treadmill at home. Don't do that. Just get the pull cart. Let's walk.
We got one of those real fancy things, the stepper things,
Uh-huh.
And I can hang 4 suits on that. And it really works well. I tell you right now.
Great piece.
Yeah, it's a great hanger.
Rick, thank you for your time. If you have any questions about the show, Brian and I are always available. Obviously, you can look at principal.com and look up Rick Cordaro. He's basically the spokesman of the Principal. So thanks for your time, Rick. You've been listening to the Uncommon Life Project. I've been your host, Philip Ramsey.
And I am Brian Dewhurst.
Till next time, go be uncommon. Thanks, everybody.
Thank you.
That's all for this episode of the Uncommon Life Project, brought to you by Uncommon Wealth Partners. Be sure to visit uncommonwealth.com to learn more about our services. Don't miss an episode as we introduce you to inspiring people who are actively pursuing an uncommon life.